All right, we're back. Tasty Crypto Show. I'm Ryan Grayson. With me today, of course, Dan Cecilia. And keeping with the trend, Dan, it's Wednesday interview series. So we've been talking to traders recently off of X. We have no stranger to Tasty Crypto. We've done some spaces with him on X before. We got BossImp of Strike here today. Boss, welcome to the show.
Thank you, Ryan. Happy to be here. Looking forward to the discussion. I think the market have been exciting, and we have a lot to talk about today.
Yeah, absolutely. Keeping us on our toes. I think everybody probably assumed you'd get some sort of rally, a big bounce at some point in time. Last week has been challenging, I think, to say the least, not just in crypto, but across equities and many different markets. Feeling the pain and volatility at levels that we really haven't seen all that often in history, which makes it fun from a trading perspective for sure. We're going to talk alpha opportunities, on-chain options, your journey a little bit. I think you've got a really interesting story here that I want to dig into. But before we do that, let's just get right into it. How are you thinking about the markets at this stage?
Honestly, today I was talking like in Telegram, and I was saying I was expecting a rally either this week or next week, because for me it was kind of a bluff. Not a bluff, but like leverage this whole rally, this whole tariff discussion. What's coming is a bit more... It's a bit more of the surprise. We're going to see a rally on equities to some extent. They've been oversold for crypto. It's another story. We've been seeing like a lot of BTC dominance keeping strong. What's going to be like the risk appetite of with the ETF, with the institution in the US notably. We have been all a bit disappointed with what came after Trump, price action wise, but there have been in the background a lot of improvement. And I don't know, personally I've been seeing a lot of people saying bring Gensler back, etc., but I think they don't see how the regulation is moving, and we're getting an adequate regulatory framework. There is a lot of lawsuits that were dropped. There were nonsense that were dropped. We're going to get like a really nice sandbox to potentially play, and it's the moment for builders to come and to build and to get us like those new use cases and to integrate them and to take potentially crypto to mass adoption. So we should be excited about that, not just about price action. It's more about like the whole like environment and how with the adequate policy we can push crypto overall.
Yeah, that's what I'm interested in myself, is just to see how this evolves. You know, do you get this kind of DeFi renaissance or DeFi 2.0 given a shifting regulatory backdrop? But in no way am I advocating for bring Gensler back. I have not seen that, but that made me chuckle.
No, I've seen it
bit.
in groups. It's memes, but people are really like traumatized by the recent price action.
Did you expect the move today? Did you expect kind of this pause or this like relief that we saw today? How were you positioned for it?
I wasn't expecting it today necessarily. Like last week, I think Friday, I bought some butterfly for Monday and for Friday, and the Monday one I sold at a small loss. And the one for Friday was, I think it was on QQQ. It was 450, 460, 470 butterfly. And now QQQ shot to 467, I think, something like that. So I closed that one and I opened the one a little bit higher because I think the move is going to continue. But yeah, I was expecting. So I was positioning for this explosive rally, especially after what happened yesterday. I knew like the moment we were going to get a relief, we're going to get harder. I wasn't expecting it today. I wanted to buy spreads and to get exposure to that if we went a little bit more down. I was waiting a bit. As the week passed, I was most thinking next week. But yeah, you never know, and it happened today. But I expect continuation, so I positioned a bit for it, but we'll see.
Yeah, I would think the same. I mean, after just the size of the move here today, obviously volatility is still a bit elevated. Maybe we see some follow through. Don't necessarily think we're out of the woods just yet. I mean, we got a 90-day pause, and I think the big relief is obviously on the back of reciprocal tariffs across the board, going to 10% versus some of the higher numbers that we saw on that big, I don't know what you call it, flashcard or poster that was displayed on Liberation Day. But there's still the 125% increase, or the increase to the rate of 125% now on China. So we'll see how they respond.
But that's something to put it in perspective. The US, I think, imports around 440 billion from China, and they export 120 billion. So I think like that's kind of unbalanced, and if they cannot just retaliate with tariff, they need to negotiate. And once those supply chain move from China, they're sticky. They won't come back to China necessarily as fast as and giving how Trump, like President Trump, focus is against China, some country may move from China for, like, I don't know, Vietnam or Philippines or whatever, and don't come back. So China has to be afraid of that, I think.
Yeah, absolutely. I think you probably have a scenario where the U.S. likely has the upper hand here. But want to switch gears. Dan told me earlier today that he saw on Twitter that you had mentioned you took a wallet from, let's say, around 1 ETH to some pretty sizable gains. Everyone should go and follow you on X, first of all, or on Twitter, whatever we call it nowadays, at BossImp75, up there on the screen. But can you talk us through, I mean, you don't have to give us all the details, obviously, but can you talk us through how you did that? How does one in crypto, where you can have sizable gains, obviously, but kind of any approach that you took that was able to get you to those levels? Can you shed some light on that?
Over risk and hope everything goes right. No, but like for that specific wallet, it was the one wallet. Like I aped into some Google form project. I did a fresh wallet with 1 ETH, and it kind of 3x'd it, I think, or 5x'd it. I don't remember. It was back in April or March 2024, and I kept using that wallet, and I kept like, it was when it was the 404 meta, like those NFT mixed with liquidity, and I kept just buying that meta, buying the dips, making 50%, 2x on some dips when, like, honestly, this year on chain, if you do DGM stuff, it means high risk, following the meta. We had a few meta this year. I'm not talking about Solana because I suck on Solana, but I'm talking about like Base, ETH, all the EVM chains. If you had like 2 months this year or 3 months, it would be like March 2024 and November and December 2024. You trade only when there is like high liquidity, high volume, and you have a clear kind of meta on chain, and you just grind the groups, you grind Twitter, you try to get into like early into some projects, either early and you can get those big multiples, I don't know, 5, 7, 10x sometimes, or you get into those heated meta when you can buy the dip and hope for a 2.5x, 3x, and really don't like watch the volume, and you don't want to be a bag holder. So sometimes you exit early. If you don't feel it, you exit early. You kind of protect your profit. And on the other side, sometimes there is another strategy that I used to some extent, is you be patient. There is a lot of, if you find a project you believe in quality-wise, sometimes needs time to, like, for liquidity to redistribute, for people to exit, etc. But I've done a couple of projects that they did 10x. All I had to do is wait 1-2 months. But you have to identify quality and to know like the right parameters for that. So don't over risk. Try to trade when there is a lot of liquidity around. So, for example, lately I've not been trading at all on chain because I think you're more likely to give up gains. So you trade when the market is moving, when there is a lot of liquidity, when there is like easier to make multiples. And then now I've been trading a bit majors, and I'm going a little bit more on equity because equity is like, majors are now behaving on equity, like behaving like shit coins, basically going up 12% daily. So yeah, I think it's just you have to choose your moment and to get into those groups, to get into the follow the meta and follow the liquidity.
Yeah, and on that point, you talk about like getting in early projects or just like following the meta. Is there anything specifically you do follow? Like, where do you find alpha?
So before it used to be Discord. I was in a few groups, and I would like try to get. Now I moved to Telegram, and I started. I don't like this. Usually, like I'm a boomer, so I kind of have sometimes trouble to adapt to change. But it took me like a few months to get into Telegram bots. Now I've been tracking a little, also some wallets. So mainly Telegram, tracking some wallets, doing some DD. If I see like multiple wallets I'm following. Buying something, I will kind of DD it a bit more, or it's basically being present. And also in some groups, I tried like over time, over years, I met some people, introduced into some groups. Some are paid groups when you have to have an NFT. Some are free groups, and I try to like to continue the grind and to get into as many. One of my problem is getting information. It's not analyzing information. It's how I get the information. It's always been difficult for me to go to grind Twitter, etc. So I use groups and wallets as proxy for information. Some people are better than me to find information, and I try to exchange that with more knowledge around the markets, around risk management, etc. So they have win-win. Giving me like access to some groups or giving me information.
So when you find a wallet that's, I guess you're following a wallet, let's say, and is it simple as they purchased a token, they're getting into something, and that kind of pops up on your radar, you start to investigate it or explore it a little bit more?
Yeah, something like that. And especially if you have like multiple wallets you're following that buying, that's a stronger signal. But sometimes you're gonna have a wallet that's just buying something kind of random, and you don't have information on it. So you cannot like, you can autocopy in theory, but sometimes it's not worth it to autocopy.
Yeah. So sorry, go ahead.
Especially in times like this, like if we were like in November, I would be a little bit more loose, but right now I'm just very picky about what I buy.
Gotcha. And so switching gears to Strike, you're listed as an advisor there, and you're pretty, you're part of the team. Can you tell us, a little bit more about it and, what you've been responsible for there?
Sure. So Strike was originally DOPEX. It was launched in June 2021. I actually participated in the public sale of DOPEX back then. I was just starting in DeFi, like a couple of months ago. So Strike is a decentralized option protocol. Now we are using concentrated liquidity to sell options, basically on the CLAM model. So using concentrated liquidity AMM. We can sell options on any assets as long as it has a V3 liquidity pool and people to provide this liquidity. What is smart about this is, as a liquidity provider, we can optimize your yield by selling, we kind of cut or like use your whole range to sell options, not only the active part of your range. When you provide liquidity on Uniswap, I don't know, you can provide between how much is this 1.6, you can provide between 1.4 and, or let's say 1.5 and 1.7. You will have only a portion of your liquidity that is active. When you provide liquidity to Strike, you can sell options on your whole range and optimize your yield that way. We were present on multiple blockchain, Arbitrum, Berachain, Sonic, etc. And we're looking to cover assets that are not covered by like big exchange like Deribit and etc. And also we cover ETH and BTC. And my role on Strike, I'm more an advisor on quantitative matters, and a bit of strategy. I was very involved. I was following the project since 2021, and I became friend with the team. And we felt at one point like my input was valued, and I was to be like participate in product design and work into really quantitative issue. My background is in investment banking and risk management. I worked on interest rate derivatives. I worked on options professionally on equities with risk management optimization software, which had hedge funds and market makers as clients.
So when you look at on-chain options, is there a specific chain where you're starting to see more signs of growth or a concentration of liquidity, or what, I guess generally speaking, are you seeing in terms of the maturation of the markets?
Sadly, on-chain options have not really took off until now. I think it has to be, for me, it has to be something that I've been advocate for a long time. It's capital efficiency, how you can sell options where being capital efficient and having some kind of this margin on chain. And I think something a lot of options protocol are not exploring is potentially how to get that capital efficiency and also how to reduce fees also. For example, I would like to see a Deribit competitor, something like Hyperliquid, a Deribit competitor that has lower fees. I've been dying to try some sophisticated strategy on BTC, on ETH, but the fees are killing me on Deribit. It's 3 bips, I think, 3 or 2 bips, so it's 0.03%, and it's huge on BTC. For me to be profitable, as if I open a butterfly, I'm instantly down 20-25%. And that completely kills my risk reward.
Yeah, absolutely. It's tough when it's that wide or the fees are that high, in a sense. For anybody that's not familiar with on-chain options, though, I mean, is it fair to say that it's very similar to the experience that you might have? And granted, there's maybe a little bit less liquidity at times, and I think that will improve as we go forward. But is it fair to say that it's very similar to the experience that you would have with, say, a Tasty Trade or trading options as a retail participant through a brokerage firm? Do you have an option chain? Can you use similar strategies regardless of the capital efficiency? Is there still a way to approach the markets that way?
So for Strike itself, you can only go long options via buying them or provide liquidity. You cannot do at the moment selling like spreads or butterfly. You can on some other exchange do it, but the margin, to my knowledge, is not very well calculated and the liquidity is not present. The advantage of Strike is since you can only go long options, you have a small discount compared to what you would have on Deribit, for example, or etc. So you're gonna get that because it's a win-win situation when liquidity provider get a higher yield, but since they guarantee the payoff only if you are in the money, you get a discount. So for you, if you want to like swing and to get like this big leverage at a small discount and you kind of bullish in 24 hours or 1 week, that's the maturity we have. You can do it. On chain, honestly, for me, liquidity has been very, very problematic whenever I use. So I use Strike because it's a mid price. Whenever I use other platform, I'm gonna move the mid price, or I'm gonna get like this margin problem. So I'd rather use, for example, Deribit or Bybit, even if I'm not a fan of their liquidity. I think the liquidity has to scale, and it's hard because we need to get like some market makers, and the problem there is not liquidity, so market makers are not coming. So that's why we need like kind of a big push on options on chain to get like sex-like experience on chain.
Yeah, I kind of think that will probably, I mean, we sit in the US, so we have a bit of a US centric approach, but should we get regulations over time that I think influence activity on chain, that probably has to happen first, but I think it will happen, which I'm excited about. And that's probably another indication of how early it is too, that you don't really have a robust or mature derivatives market in this space. As you've mentioned, there's Deribit, but it's kind of it. So I think, again, another sign that it's early, and while it could be frustrating at times if there's less liquidity, I'm excited about the future.
I'm hoping because I want to see like this option sector like expanding. It's been only retracting since early 2023, so it's a bit painful to see. We used to have a lot more activity even on chain. I think it has also to come with people understanding perps easier, and options are a bit more complicated. I think the real boom in the US came from retail and from Wall Street bets, and we kind of have that, hopefully, that moment for crypto options at one point. And talking about Deribit, I think Coinbase put a bit on Deribit lately, so that's kind of interesting.
Yeah, that would be really interesting if that plays out.
Yeah. Do you have any thoughts on that? Yeah. Like, do you think that's a good thing for the space? That consolidation or Coinbase acquiring?
Yeah. I think like if you can get for me, I'm frustrated with the overall market, option market, even on derivatives. I need to check. By the way, today, ETH option ETF has been approved, so I want to check the liquidity on that. I think on IBIT it's really good. I need to check on that. Maybe I'll do a little bit more options. But yeah, I think it's a good thing if Coinbase basically since early this year have been taking more risks. And I think they're going to push for being really the flagship of crypto in the US, and have them having options and pushing them to retail should impact also on-chain options, but should impact the liquidity. Maybe the fees also get more actors, be able to do all what we can do on a regular broker on derivatives. That would be very, very nice to me, honestly.
Yeah, just to that point, boss, like you mentioned, coming across the wire here, it looks like 30 minutes or so ago, SEC clears Ethereum ETF options trading for BlackRock and Fidelity ETFs. That got lost somewhere along the way, given everything else that was going on today. But that's huge. That's really exciting. And again, is another step towards, I just think, again, the evolution of this space.
Yeah, definitely. Now we're waiting for staking on ETH ETF, I think, and that would push a bit ETH price higher and get like some traction from boomer that want that 3 or 4% dividend yield on their ETF. Or
Absolutely, yeah. And I think it's great to point that out because, you know, we look at kind of the short-term volatility, and as you mentioned earlier, you know, there was a lot of excitement built into kind of the post-election price action and the assumption that we were going to see immediate changes, which nothing ever happens overnight like that. But when you look at kind of the roadmap, or you look at maybe what's on the horizon, in a sense, again, a lot of indications that it's still early, right? We don't have Ethereum ETF staking. We don't even have a Solana ETF. And I'm not saying that you need an ETF wrapper for all of these different tokens, but a couple more catalysts that likely sit on the horizon that could certainly induce flows for sure.
For me, I think it's how we see the future and how potentially the newcomers what the newcomers will buy. After like BTC, ETH, Solana is a certainty for me to some extent. Who will win between ETH and Solana? I think they're not really competitors. They're like serve different audiences. But after that, what will stay? What will consolidate? What will emerge? That's the big unknown for me. For example, we can see a development of BTC DeFi. What's going to be the big trend? What's going to be the winners of the Trump administration? That's the big question, and that's something to be looking forward and to try to find it and to place the bets pretty early.
Yeah. Do you have a view on that? Is there anything that you're looking at that you think might be a winner?
Potentially BTC DeFi, maybe, but honestly, I don't know a lot about it. I need to look a little bit more about it. Something like everything that is BTC centric seems like a good narrative, and I need to do more research about it. I need to this year I've been trading a lot. I've not been like researching a lot. Now I think it's the moment to take some time and to try to figure out and to be on top of the new meta, or like the new narratives, I would say.
Yeah, make sure you share that with us when you figure it out, though.
Absolutely.
Will do.
Yeah, so we always ask our guests, do you have a bull prediction for Bitcoin or crypto broadly over the next year?
I think Bitcoin is easily go to 150K in the next year or something. I won't say 200K. But that's on the table. But I think Bitcoin is very well positioned. When you see, even compared to like traditional market, it held very, very well. Like I think it outperformed Nasdaq on this drop, almost outperformed Nasdaq from all-time high drop. So I think like Bitcoin is very, very solid, and it should at least go to 150K by mid 2026.
Music to my ears. Yeah. I mean, when you just look at the chart here, it does seem that there's a similar pattern forming to what we saw for, most of, let's call it the March to pre-election cycle there, or that period, and then you had the election catalyst, obviously, and you shot higher. Well, you're kind of seeing a similar, I don't know if you want to call it a fractal pattern, but you're kind of seeing a similar trend in place here. And I think if we can just base around 75, 80, that's encouraging, to say the least.
And we've been distributing a lot of market cap, like even the increase from 65 to 110 was very, very fast. And that's adding, I don't know how many, 500 billion or something, 600 billion of market cap. So it needs to kind of solidify and like distribute and get ready for the next. I think if we made the bottom right now, it's very bullish for Bitcoin, I think.
Absolutely. Well, before we let you go, one last question for you. Any advice for new crypto traders or investors, given you've been in the space for a long time, you got a lot of experience and you've had a lot of success?
I think wait for when the moment, like how I was saying earlier, trade when the market is really moving and is really positive. Like usually there is a lag between price action for majors, BTC and ETH, and how the on-chain activity goes up. So when the on-chain activity ticks up, you can try on-chain and you can try to understand how things move. Don't over-risk initially, but what's interesting about on-chain is the asymmetry of risk. Is you can lose only 100% of your initial, but you can make multiple X, 2, 3, 4, 5X. So once you get the feel of it, try to get your risk on check and to not over-risk. You don't need to over-risk to make money. But yeah, trade when the market is good and don't try to over-trade when the market is like turning bad or going down or there is less activity. And don't greed, don't it's better to exit before the top than to hold on the way down, and there is enough opportunity for you to make money, basically. But just take time to learn, and it's not gonna be a quick dollar, but if you take time, you can potentially hit it big.
Awesome. Well, boss, we appreciate the advice. We appreciate you coming on the show, and hope everybody enjoyed this interview. Definitely head over to X. Give BossImp a follow on X at BossImp75, an advisor to Strike. A lot of good content on his feed. So check him out. Hope to have you back on here as well at some point. Want to do a roundtable. We've had a lot of traders on the show, a lot of people with a focus in the derivative space. So would love to get you back on here at some point as well, boss.
Anytime. Honestly, anytime. Thanks for the discussion, guys. I hope I didn't talk too much, and it was a pleasure, Ryan and Dan.
You're great. Yeah, thank you very much, and we'll talk to you soon. And that's going to do it for our show. We will be back on Monday. Until then, I'm Ryan.
I'm Dan.
Peace.